For the latest happenings in the Street's growth seeker portfolio, I'm joined now by the PM, Chris Versace. Good to see you, Chris.
Good to see you, Rhonda.
And let's start with an addition to the bullpen. So it's a stock you're maybe thinking about adding, and it's Fitbit.
That's exactly right. You know, the bullpen is where we kind of have these stocks that we're keeping our eyes on. You know, if we're looking for maybe, a stronger than expected outlook, maybe a pullback in the stock price, we'll be ready to pounce. The one you mentioned, Fitbit, we love Fitbit on one hand because of the explosive growth we're going to see in wearables, but also, too, this other driver that is dealing with a push towards helping mitigate rising healthcare costs with corporate wellness programs. And one of the reasons we like Fitbit, obviously it's products, but from the corporate perspective, it's a lot cheaper than others, say the Apple Watch. So from our perspective, we want to see Fitbit pull back around $30. That puts it in our striking range below a $6 billion market cap.
And it's come down a bit from earlier levels. So
yes, it has.
It's getting close. Now, you've got another stock in the bullpen, and maybe you'd rather it just stay in the bullpen for a long time. That's United Natural Foods.
Yeah, I mean, we identified that going into it, saying we like the entire push towards health and wellness, and United Natural Foods is really getting those types of products, organic, gluten-free, and the like, to more and more stores. But key customers, Whole Foods, and Whole Foods has had a rocky time. So we kind of telegraphed our staying on the sidelines to see how this current push shakes out. Company reported, little concerned that they're pushing to more mainstream grocery stores, supermarkets like Kroger is weighing on margins, and that's exactly what happened. So we're going to stay on the sidelines for now.
All right, and finally, you downgraded one of your holdings.
Yes, Aris Capital Corp. Given the tone of the economy, as well as the likelihood that the Fed does raise interest rates, as well as the risk reward in the shares, we thought it was prudent to downgrade it from a 2 to a 3, which 3 being means that we would look to exit on strength, and that's what we're going to do.
Why is it a negative if the Fed raises rates for this one?
Well, if you take a look at what they do with debt financing and stuff, we think that we've probably seen a lot of pull forward ahead of the Fed potentially raising rates, so that could mean we could see a drop off in business.
All right, Chris Versace, thanks so much.
Thank you.
I'm Rhonda Schaffler for The Street.